Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And world on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
There we go. I'm so sorry. What the hell? Should I start over? Should I start over? Good morning, guys. It's Monday. There's a Federal Reserve meeting this week. Sometimes when there's a Federal Reserve meeting, things are a little bit slow until the Federal Reserve meeting. But we are seeing some significant shifts, particularly in the dollar this morning, that we want to keep aware of. There we go. Right? Charts. Treasury. Big move up last week, but here this morning, we are on the downturn once again. Meanwhile, S&P 500, pretty big downturn on Friday, but they are pushing up again. Oil on the upturn today, but still well below 100 and within recent ranges. Natural gas having a pretty strong move trend up. I'm concerned about energy prices this winter. Very, very concerned. Silver and gold, well, they're off of their lows. They're off of their lows, but still looking pretty awful. Kappa has kind of been going sideways for some time now. So this is one of the more curious things I continue to see in the market. Copper not really turning like risk on or anything like that. And then over here we got Bitcoin. There being some decent movements last week, but here this morning, Bitcoin pushing back down, and we've got a weaker dollar this morning, pressing below 106. The dollar, of course, being a key problem for the equity markets in particular. So that is where we're at. I am sorry. You know what? I don't know what the deal was with the audio. It just like it randomly decided that it didn't see my reset everything. I don't know what was with that. Okay, so I got a couple of things I got to do here. First thing is that somebody from Jigsaw, I had this really bizarre bug the other day, and somebody from Jigsaw wanted to see it. They're like, "Whoa, wait, how did that happen?" So they wanted my template. Let's see here. So let's go find our templates. No, that's not what they want. I think it's my workspace. There we go. Okay, next, somebody was having a problem. Their indicators, we got to respond to them. Hmm. I have some work things that have programming errors. What? 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 Hmm. Open in new Ninja script editor. It doesn't open. It's telling me that there's like a programming error. I can see where it is something that did not get reset, but what is the that is really weird. Huh. I made an indicator? Oh, that is so weird. That would do that. Since it's being a bill, I think I'm gonna have to go and do some command line hexoring, huh? Let's see here. So we're gonna come into NinjaTrader. And I'm gonna go to the bin folder here. Bin custom. Here it is right. Here's the file that's causing problems right here. No, I'm not interested. That's weird. Well, man, it's been a year. That was a year ago. Okay. So now it should build. Yes. So I was looking in here. You should be able to go to Tools, Remove Ninja Script Assembly. Sending, sending, sending. Now, there's a couple of tools that I have on here. I've been thinking about it, and I'm like, actually, I use more than just those things, and I should probably add them in. Where's a piece of paper? So I want different ATR. Is there one of those? Let's see here. I'm going to go to Ninja or Lizard Indicators. Oh, okay. So we want let's see here. Spread. Lots of things we can add on there. And then I'm wondering on these charts over here. I got the spread indicators on those. And I really use the spread indicator. I just don't understand how anybody lives without a spread indicator. Range in the ATR. I should probably consolidate that into one thing. ATR. So I use the ATR a lot. Ooh, you know what? That would be nice. Okay. Good morning, Dan. Oh, let's bring things back over here. I'm just going through my library here. I think that there's a bunch of work that I've done that, I never really turned into an indicator, but that people might find valuable. Got this yield chart in there is it's a really good example. I don't use it regularly, but I think it's pretty great. And I did have some work on it that I didn't release to you guys yet. There's also a couple of them that I kind of abandoned that I think I should finish. Like the bid-ask spread. What I should probably do is I should probably have another folder that should be like Speculator Seth Alpha that I put them in. And yeah. Having a hard time recalling. Like, is the pulled prices? The pulled prices is in there, isn't it? Maybe it isn't. I haven't been using that one recently because after the pandemic, it was so frequent. It would happen so frequently. But now it's it's probably not as common. I think we should look into that one a little bit more. Same with like Atlas. I don't know if I don't have it in the documentation. Santa Fe is one that one I think is kind of an experiment that I think I decided didn't work, right? I don't know. I have to look at that. This yield curve free. Yeah, probably. I mean, I put it out there on the Discord, but I don't think anybody's using the basic version of it. I might just meh. The stats, though, I've really given you guys stats that are. I don't include it in my downloads, but I should. I think what I might do, is I'll just, I mean, because there is some stuff that I put out there that was free before, but and I've had like the free version and like the paid version of it, but probably what I'll do is I'll just make a new package that is like the free package and not really worry about them being like two versions and stuff. We should do something with the pivot chart. Yeah, let's do something with pivot. I have some ideas about what I can do with pivots. I think I can make it so that you could switch it between pivots and swings with the same indicator. And I'll have all of the methods and logic in there that would allow you to really do good back tests with it. I have so many. Oh, I remember that one. Bar grade. That was the one where somebody wanted me to make it colored differently based on how much of an up bar or down bar it was or something like that. And this one I would like to include, but I think it would require a little bit more than that. This one is the CADF. Basically it tests for co-integration. There's also my column panels. I don't know if I really want to include that one though. Dimensionless PF polarized fractal efficiency. I don't think that one's mine. Elder impulses. Wow, now that one's technically GPIs. Oh no, you know what I did? I added that is the event. Cool. Man, there is a lot on here that I made and just kind of was like, okay, that's interesting, and then just kind of forgot about it. Here's one. I'm pretty sure I did that one. That was a Kalman filter. That's the one where I don't know where it's actually useful, but maybe somebody will. Here's the one that's a efficiency indicator. I don't know. I might have made that one too. Oh, the label remover. That one was cool. There's just too many things. Oh, by the way, I forgot to say good morning to Dan and Rakin Beats. Okay. I think I got a bit of work ahead of me. I remember the Kalman filter, but I don't remember the efficiency. Kalman's efficiency ratio. No, Google, I did not misspell it. Maybe it should be Kaufman's efficiency ratio. Efficiency ratio was first presented by Perry Kaufman in his 1995 book Smarter Trading. It is calculated by dividing the price change over a period by the absolute sum of the price movements that occurred to achieve that change. Wait, what? Hmm. Hmm. Yes, it is. It is. It is the Kaufman efficiency ratio. I've heard people using it for a chop/sideways filter, but it doesn't make sense because, as far as I know, there's no predictive significance in it. It just shows what happened. Yeah. Well, the thing is I'm trying to figure out where it came from. I have an indicator on here called efficiency. Maybe I wrote it. I don't. I don't know. Oh, here you go. I think this was one where I see. Somebody else made it and then there was a problem with it and I fixed it. That's what it was. I didn't really even understand what it was doing. The Kalman filter, though, I definitely wrote that one. That one's nice and clean and simple. Now, the problem with the Kalman filter, when I tried just putting that on price, didn't work very well. But there could be uses for it elsewhere. Just running it on price doesn't really make much sense, but there could be use for it in other ways, right? But there's a couple of these other things that I will definitely fix up and clean up a little bit. Jim Iorio, I don't know how you're supposed to say his name. Says the official definition of a recession is a Republican-caused economic downturn that results in at least 2 quarters of negative economic growth. By the way, when is that? Let's come in here. Oh, you didn't even have my new squawk on. That would help. So I needed to go through all of my things. And I think that this stuff can go to the beginning. Cool. I really need to schedule Series 65 test. Okay. So we were looking for, when is the GDP number? Is that Wednesday, Thursday? That's this week though, isn't it? Advanced GDP quarter over quarter Thursday. Then consumer sentiment on Friday. There are a couple of significant numbers after the Federal Reserve meeting on Wednesday. That's a little curious. So the big controversy right now, and I have to say it was really interesting to me how much interest or traffic this was generating yesterday over the definition of a recession. So I think it's, what is it? The MBER, the National Bureau of Labor Statistics or something like that. NBER. National Bureau of Economic Research. And there's a committee. Okay, so anyways, we get the GDP print this Thursday. And basically 2 quarters of negative GDP growth in the past has been a recession. And now what's happening is all of the Democrats are kind of getting out in front of this, I guess you could say. Basically saying, well, that's not actually the definition of a recession. is basically what they're saying. They're saying that, because technically it's just the National Bureau of Economic Research that says there's been a recession, and they kind of vote on it and stuff like that, right? So basically, they're all front running for when the GDP number ends up being negative, so that the media doesn't come in and say, well, we are in a recession. They're going to say, well, the NBER hasn't officially called it a recession yet. So it's not a recession. That's what they're going to, that's going to be the argument. It's going to be a dumb argument, right? It's going to be a dumb argument because like, here's the thing. Are we in a recession right now? We've had 2 negative quarters, negative GDP growth quarters. Okay. But employment is still really, really, really low. You got to remember that back in like the 90s, getting unemployment below like 7% was crazy, crazy hard. So, you know, like employment hasn't really been affected. So like, is it really useful to call this a recession per se, other than for political reasons? Personally, I don't think so. But it could get so much worse, right? Like the whole thing is that if when you come in and you talk about the Federal Reserve, so like all of the we say all of the Wall Street analysts, that's the word that I'm looking for. That's so BS, right? Okay. All of the Wall Street analysts right now are like laser focused on the Federal Reserve. And there's like a big dichotomy in the market right now. There is a group of people that think that we're basically at peak Federal Reserve hawkishness. And there's another group of people that believe that the Federal Reserve is likely to remain hawkish until, because it will probably require more than that to get inflation to cool down. And I think that many of these guys are coming from the place of, it seems like inflation has been baked into consumer expectations and we're starting to see people's incomes move up and all that sort of a thing, right? So they're all kind of saying there's no way that the Federal Reserve is able to continue raising rates without creating a recession, and that the United States will go into a recession in the next year. So they're all saying, well, we're not in a recession yet, but we will be. Right? So like the whole thing is, we have 2 negative quarters of GDP growth, but so we don't call it a recession yet because the National Bureau of Economic Research hasn't called it a recession yet. But then there's a pretty considerable group of economists that think that it's going to get a lot worse, right? So then there's definitely going to be called a recession anyways, right? like that's why I find this argument a little silly. But the political people, they're just going to be focused on the politics of it, right? If the Fed rate goes from 3 to 3.5 and then we get destroyed, well, and so I think you're saying that because there's been at least one person. I forget who was it. Who was it? Was it Peter Schiff? Was one of those guys? It was one of those kind of controversial hedge fund manager guys, and he was saying that the debt becomes unserviceable above 3%, right? I think that's why people kind of put this dividing line at 3%. I'm not so sure it's that simple. So one of the things that you have to remember is that the Federal Reserve existing debt doesn't go up because the interest rate changes, right? Like the coupon on a bond stays the same, essentially. So what the government is paying out doesn't change. It's just the new debt. It's the new debt that will have the higher interest rate. So where that line, at which point U.S. debt becomes unserviceable, is where that is kind of questionable, and is like a moving calculation essentially. But at the same time, I don't know if that's the Federal Reserve's problem. I've never seen anything. The housing market will crash. Well, the housing market has already come off a lot. Sure, I don't know if it would crash. I mean, define crash, right? Housing prices could come back, yeah, but like people are still gonna buy homes, man. I have to say, the demand for housing isn't going away, man. It's gonna be remaining high for a long time. The only way that they fix that problem is if you keep building tons of houses even when we don't really need them, which is under the current economics is probably not going to happen, right? But, was what we've already seen the change in housing activity, would you consider that a crash? I mean, it's a decline. I wouldn't call it a crash, right? I guess the 2008 market is a crash, but I don't think that it's gonna like crash, aka like dysfunctional market. People need to be bailed out, sort of a thing. I don't think so. So why are all of the banks laying off their mortgage departments? Source that. We can look at the specific instance you're talking about. 8 or 9% interest rate on an 800K house. Few people can afford. Yeah, well, yeah. But that's the whole thing, visual trader, is that the number of people that want to buy houses is too high. So the price on the houses goes up until it equalizes the number, until the supply and demand are equalized, right? If all of a sudden the interest rate went to a point where like literally nobody could buy it, then the prices will come back down to an equalized point. But the whole thing is that people wanting to get into a house, that's not going away. People are going to be doing everything. See, I was ahead on this, right? I knew this was coming. I worked very, very hard to get into a house as quickly as I could. And I've been living here for, how long have I been a homeowner for now? I think we've been here for 3 or 4 years, and then I was 2. So I think I've been a full homeowner for at least 5 years, right? I got a pretty good deal because the building costs went way up after I built my house. These millennials, they're all coming into that spot. They're not going to stop wanting houses. They're not going to stop wanting houses. And so if there's like a crash, right? And then the Federal Reserve has to reduce interest rates again. Cool. And then the millennials will just buy houses like crazy again. Right? This other machine is on and I think it's making this room hot. I think I'm going to turn it off. Well, they won't get approved, but again, guys, you're what is the argument here is levels of degree, right? AKA, if housing prices decline, by how much will they decline? And all I'm saying is that some people, millennials, because they really want to be into a house, are living under this delusion that another 2008 crisis is going to happen, and then they're going to be able to, eat up all of the houses at cheap prices and low interest rates again. Probably not. Probably not, because every other millennium is thinking about doing the exact same thing, right? So the demand is going to be there. Outside of whatever the economic conditions are, right? I mean, like, demand will fall if there's a recession, right? But it'll still be relatively high. But there's this big question about. Okay, so here's the thing. Let's look at it from this way. When will the U.S. Never. It'll never happen, Lambrecht. It's not. It's impossible. Well, no. Let me take that back. It's not impossible. If the United States defaults on its debt, it will be because of a political drama, right? Banks will heighten credit requirements. Could be. Sure. People are still going to want to buy the houses. So, like right now, Federal Reserve is about to raise interest rates to 2.25. If they raise interest rates in September again, 75 basis points, which is what the market is currently pricing in, that will put us at 3%. Okay. So what happens if September inflation print is hot? Right? They're going to have to raise interest rates a lot higher than 3%. And you're telling me that after that, in October or November, I'm not quite sure which one is the next meeting after that, that they're only going to raise interest rates a quarter of a point or half of a point? But then that would put us at 3.5, right? And right now, the 10-year yield is at 2.84, right? Well, at that point, would that create a recession? Maybe. I don't know how you just sit down and decide X interest rate is likely to create a recession. I suspect that people that are making those kinds of prognostications are don't really actually know. That don't have a very clear way of proving that that's what would happen. But certainly, I think we could say that the higher interest rates get, the probability of a soft landing decreases, right? If why? Okay, so hold up. What are you getting at here, Lambret? So why are we searching for the highly unlikely doomsday scenario? It's like you all want the dollar to fall apart or something. Is that what it is? Is we don't like the fiat money system. We want the dollar to go away. And so if the dollar crashes, then we could use gold as a standard again. But like, I'm telling you what, guys, gold's not going to become a standard again. Now, there's this whole thing. I'm a little skeptical about the headlines because the way that I'm seeing it reported is only in right-wing media, and I don't know if their presentation of it is accurate. They're saying that China and Russia are starting their own currency, and that their currency will be backed by like rare earth minerals and stuff like that, right? So let's just go along with that one, okay? Instead of gold, okay? So say that happens and their currency becomes really valuable because people need it in order to get rare earth minerals. And so that makes their currency more valuable for the rare earth minerals. Okay, cool. That'd be really good for Russia and China at the time, and it'd be bad for the dollar, right? And it would cause the dollar to go down in value, but that would actually be good for the US economy because it would make it more competitive, right? So that's the first thing, is that if the dollar decreases in value, it would become better for the United States competitively. Or to put it another way, the biggest barrier to continued economic growth in the United States right now is the high dollar. The dollar has become very strong relative to other currencies to the point that the euro is basically going to become worth less than the dollar here in a second. Okay. And it's a real problem because Like US exports have basically been decimated. Like nobody can build stuff and export it anymore because the currency is too valuable. Right? Okay. So that's the first thing. Yeah, it's bad for export, but it's good for import, sure. Which is why we're a consumer first economy. Which there's some problems with that, but I digress. That wasn't where I was going with it. Okay. But here's the thing, is that then these rare earth minerals become too expensive, and what if China and Russia kind of try and use their currency the same way that the US uses its currency, right? To bully other countries, essentially. Well, I'll tell you what's going to happen is the United States is going to find other sources of rare earth minerals and precious metals and whatever it is, and they're just going to flood the world with them, right? What? So when you come into a world, your currency is based on rare earth minerals, and then somebody else comes along and floods the world with rare earth minerals. What happens to your currency? Right? And that's going to be bad for your economy. So the reason, that the primary reason, but this is a really important thing to understand, okay? People seem to think this is the picture that I see painted by people online that is I think very, very harmful, okay? Because listen, my primary goal here is to support continued economic growth and opportunity for people, okay? So the more that you understand about the monetary system, the better, because that can allow you to make decisions that will increase your economic opportunities. And I'm not just talking about investing, because honestly, with investing, just put it in your 401k in an index fund, okay? Right? But it's going to be other places. It's going to be places where it's like you start a business or whatever the deal is, right? So it's important to understand the money, especially because the monetary system provides ways for you to deal with things like inflation, okay? But if you don't understand what they are, you don't take advantage of them, you can really get screwed by it, right? So you got to understand that system, okay? People seem to think that the system was basically like there was a bunch of bankers and they decided that they didn't already have enough control over the US economy. So they got together and they plotted that they would create the Federal Reserve, and then they killed off anybody that opposed it on the Titanic, and then they created the dollar as it is today. Okay. That's not how it happened. That's not how it happened. I mean, it was a slow thing, right? So for starters, it's been a thing, should there be a central bank, from the very beginning. And in the beginning there was a central bank, and then Andrew Jackson got rid of it, right? During that period between when Andrew Jackson abolished the Federal Reserve in 1830 to 1810, something like that, 1910 rather. So like that 80-year period where we didn't have a central bank was the most economic turbulent time in United States history. Okay? It wasn't until we put the Federal Reserve in place that we started to get some degree of economic stability, and we grew into the world's largest economy like we are today. Okay, before that, the U.S. was kind of a joke to like compared to London, because they were always like, with these crazy Americans, they're always falling apart, and I mean, it was like a 2008 style crisis, like every 3 years. It was really bad. Okay, especially when you got into like the 1870s. Okay. So, but then it wasn't just that. It wasn't just that they created the Federal Reserve, because the Federal Reserve was just about like interest rates, right? It wasn't until 1979. No, it wasn't 79. It was 69, 72, maybe. So early 70s, I guess, that Nixon took the United States off the gold standard. Now, the thing was that we were technically off of the gold standard to begin with, but then people were saying, well, Well, you can still redeem it for gold, and we're calling BS on that. Like the whole thing is that having a dollar denominated currency, or sorry, a gold denominated currency was a problem for them. Essentially, there wasn't enough gold out there to back the amount of capital that they needed in the economy to grow things, right? It's like if there's X trillion dollars worth of gold out there, right? Like, let's say that there are, oh man, I mean, I know this is going to be a stupid number, okay? But let's just say that there are $5 trillion worth of gold out there, right? You say $1 is going to be equal to X gold, right? Then there's $5 trillion worth of gold out there, okay? What if you need more than $5 trillion for the U.S. economy? The U.S. economy is larger than that, if I believe so. GDP is something like $7 or $8 trillion, right? What do? You can't print more dollars, right? How do you get that money to people? It's not practical. Russia and China are going to find this out if they go down that road. Is they're going to come to a point where they need money, and they're not going to have it. And that's why I'm a little bit skeptical about this headline that we're seeing, which is like, oh, they're creating a new currency. And I was like, well, China's not going to do that. Okay. China's whole thing is that they have complete control over their economy, and they can print the money and tell the banks to do exactly what they want them to do. They're not going to give that up for a currency denominated in rare earth minerals. So it's not going to be what people think it is. Okay. So going back to the question, I just wonder what the result of infinite debt accumulation will be. Well, so number one, I don't think that it's infinite debt accumulation, right? At some point, you want to pay that debt off. You can't just continue to push it into the future. There is a problem with having too high of a debt to GDP, okay? We know that there's a problem with having high debt to GDP because at some point, the debt starts to become too much of a burden on the economy, right? What that point is, we don't know because we've never tested it in history. We know that it can be a lot higher, like it could be as much as double the GDP, right? Japan may be at the point where it's too big of a problem, right? Where if they start to see inflation, because they are, like, that's the whole thing, is that they're starting to see a little bit of inflation in Japan, and if it, like, if it doesn't stop, it could just like explode and it could blow up in their face, right? So, but I guess the whole thing is it's not like any kind of concerns about that are unwarranted. It's just that it's not some imminent thing, right? It's not some imminent thing. And to the relevant thing with our monetary policy, which is that, interest rates are going to go up. Yes, but the government is taking out less debt than they were a year ago too. So it's a problem, but it's not a problem that would like hold markets back or would stop the whole show or something like that, like some people are saying. Yeah, I remember, was it Ray Dalio? I think it is. He's the one that's got that new book out about how the declines of societies, and he's basically predicting that the United States is going to decline as an empire and China's going to take over and all that stuff, right? This is the same guy that said, "Oh, Mexico is going to default on its debt, and it's going to cause like an ultra recession, depression, collapse the world economy, sort of a thing." And like it happened, and the market just kind of went, okay, right? Like this is the way that it kind of goes. Is like default is really bad. But it's so bad that when it happens, that all of the other countries kind of come together and just come up with a deal. Like, here's the thing. Everybody's in debt. Like, everybody's in debt. And who are they in debt to? Each other. So can't you just, like, swap debt? And, like, how does that work? They'll figure it out if it happens. There'll be tons of drama. Will be tons of trading, but life will go on. Life will go on. Never, ever, ever come in and say, listen, never make the bet that the economy is just going to get destroyed. That it's going to go away. Right? At some point, you always buy the dip. At some point, you always buy the dip. Unless because the only way that you don't buy the dip is if civilization ends. And I don't think that that's ever going to happen. Be optimistic. Can't put a number on it as a cap, just monitored, something like that. No, I mean, there will be a point, though, at which the politicians, I guess, do save changes to that. There will be a point at which the politicians will have to face some tough choices. I don't know at what point where it comes to that, but it is going to happen. The concern that I have is that, the Republicans are much, much more likely to be the ones that will make that tough decision. And I think that I think what will happen, here's like my long-term prediction. Man, S&P 500 here on the open, not looking so hot at the moment and giving up majority of the gains that they had overnight, and interest rates starting to have a little bit of a crawl back up to the highs. Anyways, I think that Democrats get absolutely drummed this next election, in the fall. And I think that they might even do poorly in 2024. It kind of is starting to seem to me, don't get mad at me, okay? Seems to me like Donald's going to run now. He's, I thought that it was kind of like drama, and I think that it's probably still on the fence. I don't think that it's actually a decided thing. But, there was a big PR campaign going around the conservative sphere the other day about how Donald Trump has a plan to, like, fire all of the federal workers to try and get rid of entrenched political people at federal agencies and stuff like that, right? Like, that's the talk of somebody that thinks that they could be president again, right? I don't think he'll win. I think that if he runs again, I think that like it could be like Donald Trump versus Ron DeSantis versus Ted Cruz. I don't think that Donald's going to win. So these micro yields, Seth, when do you think the liquidity will pick up? Thanks, Rob. Okay, well, so Rob, I would say, first of all, that the liquidity in the 10-year is amazing. The liquidity in the 10-year, like there's more liquidity in the 10-year than any of y'all are ever going to trade in the micro yield futures. So, excuse me. There's some spam here. Get rid of the spam. So the liquidity in the 10-year is there. Okay. In fact, the liquidity in terms of like, will you have enough would you be able to get enough contracts to trade against you? I mean, if you're going to do a couple hundred contracts, then you're going to want to do it up here anyways. But, even if you wanted to do couple hundred contracts in the 5-year, you could probably get the activity to make it happen. You could probably get the market maker to do it for you. The problem is the spreads that you can get. So really the question here is, how long is it going to take for the spreads to go away? Oh, this person, I'm not sure why it was with this. I sent them my workspace with the problem. Yeah, the treasuries are really ripped up there, but I mean, look at the S&P 500. It's a total risk off move. By the way, I have my new video out. Let's come and pull that up. Because you were talking about micro yield futures. Well, we have a video about micro yield futures. I wouldn't worry about, anyways, to my point, Rob, I wouldn't worry about the liquidity. What I would worry about is the price that I am getting a good price? Okay. Use limit orders. Make sure that the price that you're getting is a good one. Yeah, here, let me link it here in chat for you guys. This is kind of like my what is the word? My PR campaign to get more people to trade micro treasury yield futures. So like on one hand, so there's a couple of things here. Like again, the 10-year liquidity looks really, really good. There are market makers out there that will trade against you, okay? Or that are willing to take the other side of this. The amount of activity in the 5-year is pretty pathetic. It's pretty pathetic. So the thing is not just that we need well, I think that there could be many orders of magnitude more people trading treasuries in a couple of years. Like retail traders are going to pick up on this, you know, that it is like the lowest amount of risk that you can day trade, basically. Right? Yeah, everything by the 10-year has volume in the triple digits. Yeah. But what we need to do is we need to get to a point where more retail traders are trying to do spreads, essentially. So I give you one here is these yields are a little messed up. Wait, what is the 2-year exactly? Is the 2-year at 2.01? No, it's at 3.01. So like the 10-year, for whatever reason, is like way lower than everything, and the 20-year is really, really bad. So like there are some kinks in the yield curve that we could be trading right now, right? I've been working it out, and I've been trying to do the math, and I think that some of this makes up it. The thing that I'm having a hard time sort out is like correct entry location and judging things in the more of a short-term trade. But the way that a lot of these guys would trade was just like, here's what the yield curve looks like right now, and here's what it's supposed to look like, and they would trade towards that. So they weren't even necessarily doing spreads. They were doing like butterflies and stuff. And a butterfly in this would work really, really well, right? Like all of the problems that you had over in the main treasuries was like making sure that you were truly neutral and everything. Over here, you do. Over here, you're like literally just trading the yield curve. So there's a ton of liquidity in the MES, so I'm hoping the same. Well, yeah. I mean, so the challenge here is going to be, how do you convince people that the liquidity and opportunity in the micro treasury yield futures is better suited to them than the equity indexes, right? Equity indexes get all of the attention because, you know, that's just what people talk about. The Dow Jones was up today, etc., right? They don't really talk about what the interest rate was today very often on the news. So that's kind of the challenge. But I think that especially for brand new traders and small accounts, because I mean, there's some of these people that are trading with accounts from, you know, let's say anywhere from $500 to $5,000. Okay, that range. Micro treasury futures are probably better suited to the amount of risk that you have. You go over and you trade ES, you can blow that in one day easy. You know, you can blow $1,000 in ES from over trading. You know, if you're being dumb. I've seen it happen before. You You can definitely do it with oil. Micro yield futures. I mean, you look at today, like what, maybe $20. There was maybe $20-$30 in this today for a relatively large swing. How about gold? There's micro gold. Oh, really? About the micro treasury yield futures? That's cool. Well, I really hope that this video does well. I was kind of basing it. I did a little bit of research, and this was the kind of video that seemed to be performing well in our space. So I'm hoping because of that it does well. And I do have some other videos. This one is probably the biggest challenge for me, is like how to organize all of our knowledge about the interest rate market, because it's a lot for our next couple of videos. But I already have a head start on that, and I hope that those will do really well as well, because I'm just kind of looking here and I'm like, well, yeah, we talk about interest rates, but we don't have a whole lot of content specifically about interest rates, and we should. So we're moving in that direction. And then once we get that stuff out of the way, unless there's, people come up with other questions, because most of the content is based on the sorts of questions you guys ask me here in chat, right? After that, though, I think that we start to get more and more into current issues. I'm hoping that I can have more fun with current issues, because with like the video today, I don't feel like I'm able to be as funny with them, because I'm just trying to get all the information out, right? So we'll see. I think that the channel will be more entertaining and will grow faster once we start getting more into current events. But I have lots of things that I got to do. I don't, and now is a good time to point out, if you're new here, make sure you hit that subscribe button and click the bell icon. Our channel has a very high, it's like double the number of people that click the bell icon compared to the average YouTube channel. And you do that because it's a lot easier to find the stream in the morning. Although if you really want to be sure that you find the stream in the morning, I have a link down in the video description that is like the permanent live stream URL. So you can just bookmark that and open it up every morning, and then you'll make sure you always catch the beginning of it. So we do stuff at the beginning. We talk about, the overnight moves. I think that's important information. So make sure you subscribe, but then check out the links in the video description. I know that we have a tendency, because that there's going to be a lot of promotional material in the video descriptions, right? But I do not put anything in that video description. I don't take on any kind of deals or any of that stuff unless I genuinely believe that it will be beneficial to you. Okay. So the tools that I have affiliate links for and so forth in the video description are all things that I regularly use. So I use Jigsaw as my primary trading platform. I have a coupon for $100 off in there. Have an affiliate link to Financial Juice, which is the news squawk that I use. You have to have a news squawk. Okay. So that one is very, very valuable. And then what else do I have in there? Oh yeah. And then Yada, that one's just for fun, but I do use it. That's one of your best options for a savings account. Put money away in there for a rainy day. Okay. That should be where you put your rainy day fund, is, just put like $25 a month or whatever into it. And that one's fun because it's kind of like a lottery system, but well, I really love that one. And then we got the mugs. The mug is just like, you're here every day, so why not have something to show for it? We should probably make better merchandise, but I digress. So make sure, if you haven't checked those things in the video description out, that you do, because there are things in there that could be useful to you, right? And I feel like I don't do a good enough job of pointing that stuff out. And then there's my indicators. I probably should be, but there's a bunch of stuff in there that I need to add, essentially, that I've kind of written and used, but I didn't add into the thing. And yeah. I I could do better than. I mean, I think that the indicators they have in there, especially the spread indicator, I use the spread indicator so much. And I've been testing some changes to it. They seem to be going okay. So I think that I will push those changes out to you guys soon. But I don't talk about the indicator package enough. I think the problem I've always had with the indicator package is that, I use it and a lot of the things that are in there are really complicated and sophisticated. And, it's kind of hard to describe that all to other people. You know what I mean? To be like, here's the value of it. Some of these other things that I'm adding in there, I think could be a little bit easier to understand what their value is. Right. But I just don't promote it enough. And part of it is just because, here's the thing. I do pretty nice with my day job, and I'm probably too comfortable in my life, frankly. Too comfortable. Um but I only put the money that I make from the stream, and I mean we could consider this a business now at this point. I put it back into the business. And really I am obligated, frankly, to work as hard as I can to, make as much from the business as I can, because then that builds the business and that means better products for you guys, right? So the one thing that I can probably do that helps you the most in the end is for me to work harder on the business and do a better job at promoting things, right? So got to remember to mention that to you guys every day. And if you've tried the indicator package and you didn't find it too useful, then you should tell me what you would find useful so we can make it better, right? Oh, the AC just turned on. That feels good. Well, the S&P 500 may be turning back up. We'll see how the treasuries react. Kind of seems to me like we're stuck in just reacting to equities right now, which is usually not the best trade for us in the treasuries. Oh, we shall see. By the way, I never heard back from Jigsaw here. Hold on. So was having a problem. I want these other instruments to be showing correctly, and they're still not doing that. What's this? Oh, jeez, these guys. Well, let's try reloading everything here just for kicks and giggles. Maybe they fixed it and they didn't tell us about it. Unk is such a weird file extension, whatever. I don't know what Unk stands for, but kind of amusing to me. But I think I messaged them about that on Thursday, so like. In the meantime, we never went back over Twitter. Oh man, Elon Musk. Have you heard about this drama with Elon Musk? So apparently the thing going on with Elon Musk is that there is a accusation in a magazine, I forget which magazine it is, that Elon Musk had an affair with the Google CEO's wife, I think it was. And this is a problem because Google CEO will have to sell some stock to give it to the wife, right? So I think that one's like, I couldn't think of like a worse. Oh, hey, they're all fixed. Oh, yeah. Oh, no, wait. 3.017, 2.9038. Yeah, they are all fixed now. Good. I think we're all good here. You know, I have kind of been thinking. So let's switch. No, wait. Let me first finish on Twitter here. Okay. Oh, cool. Axia is going to release their FOMC preparation on Wednesday. To conclude, this meeting is likely to be the first non-event for a while. This will be the objective of the committee: get to the August non-farms payroll data, and remain insistent on applying inflation whilst hoping the labor market can stay strong enough and buy necessary time for supply-side constraints to tackle persistently high inflation. The Fed has done all it can now. There is nothing they can do from a rates perspective, so they will fall back on forward guidance and allow market forces to interpret the data and price things accordingly. Well, I don't know about that one, because the problem is that if they go on the forward guidance and everything, then it's probably rates end up being higher than where they are, right? I think that what you might see is like the meeting itself is a non-event, but we get a lot of dramatic moves afterwards. Yeah, the reason everybody's talking about this definition of a recession is because the White House put out a note about what is a recession. So, of course, which was probably a dumb thing for them to do, but whatever. Whatever. Oh, Larry Summers responding to people saying, oh, Larry just wants them to increase unemployment. And he says, well, no, I care about it because I want unemployment to be low. But if you let inflation get out of control, that will be much more damaging to employment, right? Rob, why do I need to forgive you? What's that about? What did you do? Yeah. But we don't focus on what drives profit per se. We focus on what is the most beneficial to you guys. So like the thing is, the number one focus is always going to be on the content, right? We, these videos, I do everything I can to. I wish that I was putting more videos out. I really do, but every other week is about what I can do right now, especially with 2 infants, good toddlers. It's freaking hard. Okay, I don't have much time to. I can't just lock myself in the room every night and write, which is what I would like to do, fortunately. But after that, it is the revenue generating parts of the channel, and it's not even like those are like the most important things after that. It's kind of more like those are the most neglected things, right? I don't really care personally so much about them, and so I kind of forget about them and neglect them, and really I shouldn't be. Really I should spend more time talking about them. I should be making sure that, because I think that the issue that I have is like everybody that visits this stream could benefit from having a news squawk. And not everybody that has visited this stream knows that we have an affiliate link for a cheap news squawk in the video description, right? That's where I'm having issues, right? So how do I make sure that we bring that up enough that the new people understand that that's there, and that it's $100 a month, but it's a very, very valuable thing. Now this other thing was one of the things that I think I have got going on here is I do think that some people might come in and see the screen and just be too intimidated. You know what I mean? So I got to figure out how I can, like, I don't know, man. I don't know how to do it. But I should have a screen that's like mostly my face, and then 2 charts and a news feed or something like that, right? I don't know how to do that. I mean, I could get another monitor or something and just kind of have it off to the side and not. Actually, it's not a terrible idea. Maybe there's a way for me to make a virtual screen of some sort, and I could set it up on. I could move all of those windows over to the virtual screen. Maybe that's what I should do. Because, for instance, I could make this. Well, so this chart in the upper left, I think it looks cool, but I don't think that people really know what it means, right? I think what people want to see is like this. Oh, we had it for a while, right? We'll pull it up. We'll make another one. Yes. Minute. 5 minute. This is what people want, right? And then we can do some things here like properties. Oh, is it not from there? Maybe it's from this properties. Font. Can I make it like 24-point font? Da 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 da. What about even more? What if we did 36-point font? How about that? 36-point font. Apply. Yeah, I like it. I like it. And then, oh, I guess I got all of my lines correct. Except for that, I don't want it to be a candlestick. I want it to be a candlestick plus plus. Yep. Wick width 1. Bar width a little bigger than that. Oh man, how far do I need to take it? Maybe I can have like a 4. There we go. How about that? See, that's super, super clear. Even to the casual observer. Don't forget to add RSI and MACD. Well, we could add cumulative delta on it. The thing is that I do keep an eye on the cumulative delta over here, right? So, actually, what I would really, if I was going to add anything on here, for the purposes of people being on the stream and so on and so forth, really what we want is Rider day open, high, low, close, right? Previous close. Maybe we need to change it so that it will say previous close there or something like that. But right, and we could probably put it up here like this. To right there. There you go. How does that look? Get rid of the tab. Well, we could get away with doing it just that way because I'm not trading MES, so I could just get rid of the MES DOM and you know, I don't have to have that up. What do you guys think? Do you think that that's better? Jeez, the spam bad today. So get rid of that, and then I'll add that. And this, I need to remove the label from. Oh, it didn't change it. Why is that? Huh. Huh. That's interesting. Sim, what'd you do here? We're gonna fix that. That bothers me. You like the one before? I know. Well, I like the one before too. I feel like that it's too intimidating to people. You know? That's all. Am I wrong? Am I trying to dumb things down for my audience so it's a bad idea? I mean, that's like my natural instinct, but I feel like, you know, this has come up enough times that like maybe we should try going a little bit more whole hog with it. You know what I mean? What's going on? What is Sim22 done with this indicator? He's like the name of it is coming through differently. Like he's overridden the label property or something. On render properties, this is probably down in here. Description, delta, cumulative delta, end of day, plot, EMA period, filters. Wow, I can do it on Hyken. Jeez, I did not know that. Brushes. Huh. Yeah, I think the issue is that there's too much information on the screen at once, not that people are scared of DOMs. Too many instruments on there. Because to me, yeah, you can post something. Why, actually, why would we not be able to do that? Why would you not be able to do that? I totally trust you. Oh yeah, it would be better if you could have multiple screens and the viewer could switch between them. That would be cool, like between your face and charts. Yeah, so if I could, or not if I could, if we had gotten to the point where the stream was getting more than like, let's say that we were consistently above 50 viewers, we got to a point where we would kind of get up to 50 from time to time, but it's, competition and so forth has kind of fractured that. Because at around 50 is the point at which I start to be concerned about people trying to like shadow my trades and stuff. So at that point, I think that what we would do is we would have to have multiple streams, and I think I can set it up so that like I stream the two different streams, and one stream you would be able to see me putting my orders in, and the other stream you wouldn't. That sort of a thing. So multiple streams is possible to do. The greatest chart setup you got here. Okay. So hold on, I still haven't. Is there anything in here about label? There is not. So then why doesn't it change when I do that? That's so weird. Oh my god. Oh, you got me there. You got me. I thought that you were being serious. I was like, okay, actually showing me a chart. That's not what I would expect. Man. People on Forex Factory are already asking for the EA. You mean like the exponential moving average? The EMA is the technical analysis thing that drives me nuts the most, because when I was doing all of my back testing, the EMA was the worst one. The huge fonts will bring in views, dude. It does make a difference. Okay, we'll do a. I'm gonna resize everything. We're gonna do the experiment, and we'll see if the next 3 weeks we get more views or not. And if we don't, I'm going back to the other way because I kind of preferred the jigsaw chart. Right. But I don't want that to say Delta V4 bid ask. So if I just remove the label completely, oh, it goes away. But if I say cumulative delta, it doesn't go away. No, there's got to be something in there overwriting it. There's got to be something overwriting it. I'm going to search harder. Small fonts are irritating. We need to see your face in your zoomed in P&L. Oh. I mean, there was a time when we would show the P&L and everything, and I didn't find that too useful, to be honest. Part of the problem was that to get a really good looking P&L, I had to like use all of these utilities and stuff, and it didn't really work very well. Yeah, I guess I can bring this over here. There is a different... Okay, override display name. There it is right there. Thank you. That's so dumb that I didn't see that the first time. Indicators. And then I would come in here. I will say cumulative delta 0, maybe to reset it. There we go. Oh, jeez. None. Oh, there's too many inputs. Why are there so many inputs? Well, that's why you did it that way. Did I close that window already? No, I did not. I think you do that. Much better. Cool. I'm in love with trading as my drug. Oh, man. Gotta be careful about that one, man. That'll, chasing the high will ruin you, right? Okay, are auctions important to pay attention to for intraday moves? Yes. So Sharp and Goose, the auctions can give you some of the best trades sometimes. As of late, it's been a little bit more difficult to kind of judge that, but the general tendency in an auction is for price to decline going into the auction and then price to move back up after the auction. So basically, like, the market absorbs the supply. We have a 2-year auction today. I didn't mention that, but I probably should have. We have a 2-year auction today, which is very, very important because it'll give us a really good idea of how much demand there really is in the treasury market ahead of this FOMC meeting. I feel like that if I was somebody buying 2 years, that I would be... Well, so if I think that interest rates are gonna continue moving up and everything, I don't necessarily want to buy them right now, do I? But if I think that we're at peak hawkishness, then heck yeah, I would want to buy it now because I can get 3%, and if they're only gonna get to 2.25%, right, that 2-year could come back down real quickly. If this is the point at which the Federal Reserve backs off. So that will give us where how much demand there is for the auction will give us a very, very clear idea of where the market really is on this, right? So the next thing I'm seeing here is on my axis. I don't like the scale. American financial market efficiency is a blessing, and I am grateful for that. Oh, that's the attitude. How do I change the axis scale? Ninja Trader. They're saying just change the instrument settings? No thanks. Big tick size and exchange given market making rights. What's that? Okay, so here's one thing is that I do not like that I'm getting the price bubbles for the prior day's highs. So we are going to turn those off. Let's see here. Price markers. There we go. Da, 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 da. Why are the U.S. financial markets? Oh, big tick size and exchange given market making rights. There you go. Why the U.S. financial markets are so efficient. So I do kind of wonder, is the exchange like on these micro futures? Is it the CME putting those orders up? How much of that is the CME, basically? It's kind of my question. There's got to be a better way to change the chart, the scale on that there than that. There's probably an indicator. Let's just make our own here, okay? This one will be a free indicator. New indicator. Oops. That went too far. And then here I'm gonna say Ninja script property public string format get set. I also want from this over here this thing right here. Oops, I don't want it there. I want it here. And this is going to just always return blank so that it won't ever screw up your chart. There we go. And let's just try it like that for starters and make sure it works. Oh, yeah, actually, no, we want to do it like this. Format equals and 0, like that. Format. Da, 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 da. Oops. Nine. Oh, public override string. Oh, new AI will find a girl for you. That's hilarious, dude. Okay. Anyways. Is overlay true? That's the first thing. Did it? Okay, that was weird. I didn't hear the sound that like it worked, so I don't. Come on. That's a problem. I need the display name to return something different depending on what state we're in. But I digress. Oops. Wrong folder. This folder. Oh no, S&P 500 taking a dive again. Now it's not looking too pretty, folks. It just like all of a sudden turned. Okay, so apparently Gazprom has halted one more turbine on the pipeline. Did I kill Ninja Trader here? Think we did. Think we did. Is consumer confidence tomorrow going to be a sizable move? Could be. Some of the data that we get tomorrow does appear significant, especially with it being ahead of the FOMC, but it will depend. Man, so we're gonna have to redo all that work probably. Good thing I can just kill Ninja Trader and it won't affect my DOMs, huh? I don't know why that would cause NinjaTrader to crash, but whatever. Wah, 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 wah. What am I doing? I don't know. What am I doing? I'm restarting NinjaTrader is what I'm doing. Man, the market really reacted to that Nord Stream pipeline headline. I don't know if it actually matters. Cutting supplies further. I don't know, man. Okay. New chart. Okay. That didn't do it. There's gotta be a way to change it. What if I do properties on the axis itself? No. Properties. And I say margin upper, margin lower based on screen date range. Linear, no. Properties. Right side margin, maybe. I think that's the bit off the side here, so I don't think that actually helps. Access. There's so many things where it's like, hey, here's a problem. And then they're like, yeah. They haven't done anything to it for months and months and months and months. Hmm. Hmm. I think I can pull these in by doing this sort of a thing. Right? Yeah. There we go. Put on this side. I could probably be a little bit more exact about it than that, but have you thought of trading gold? Micro seems to have better volume than micro ZN. Well, I don't understand why the amount of volume in the micro instrument itself would necessarily matter so much. I mean, it's going to move according to its master instrument anyways, right? Well, I have an answer for that in the video that I put out today. So you go and watch that video, and point number 3 would answer that question. But to be short, it has more to do with my ability to predict what that instrument is going to do, right? It's a lot easier for me to find information about the future supply and demand of treasuries than it is for me to get the information about the future supply of demand in gold. Well, but no, I mean, you're gonna, if you're doing a one lot, you're gonna have the volume you need to, the liquidity that you need to execute against. Okay. This 5-year here, you've got to know what price you're getting, but you can still trade it. There's got to be a way to do what I want to do here. You know what? So one thing is that we should do that 3-session template thing. Trading hours, CBO, CME, index futures, quant edge setup. That's what I want. There you go. And then I get the market start. And yeah, let's not worry about that. Let's try and figure out how to get rid of the decimals. Come on, it's got to be more recent. There we go. That changing the instrument is kind of dumb. Micro NASDAQ has more volume than the E-mini. Does it really? Trade the ZQ at bear. I really think there's good opportunities for you in the micro 10-year, guys. I don't understand why everybody is like dismisses it. It really is like probably the best opportunity for retail traders right now. Seriously. Like there are these situations where you just know which way it's going to go and you can hit into it, and it's, man. And everybody, but it's like, I don't know what it is that dissuades them from doing it. It's just, it's not cool enough or something. This for like the majority of the banking world, this instrument is like the most important thing. You guys don't want to trade it. Okay, whatever. No. Oh, you can prompt to format price marker. TN is more. Oh well, okay. ZN, TN. Look, they're all the same thing. I mean, okay. The numbers, the difference between the number is very minimal. In terms of is it tradable or not, that's not an important distinction. If you're gonna do a basis trade, then it does. Sure. I can't believe it's almost already time for us to be going. Is there a way to just remove the y-axis? Because I just don't see. It's like there's all that space that is wasted, you know? There should be a format axis. Mm-hmm. Time flies when you're not having fun. I was having fun. Come on. I'm gonna be like obsessed all day though now about how to hack this so that it will do it, so that it will display the decimals correctly. I could, well, okay, so like here's what they're saying. Okay, just to show you here. They're saying if I go into ES here, the future, and I edit it, edit the price and I say the tick size and I make it 1, apply, then it changes, right? Oh, wait, what? It doesn't. Oh, hold up. Hold up. Hold up. Oh my gosh. Oh, maybe because of the format price marker? Wait, so if I come back into the data series and I get rid of the price marker, oh, how do you, can't you just turn it off? Visible. There you go. Uh-huh. Uh-huh. Well, if I'm not going to execute over on ES, that I might be able to get away with that. I might be able to get away with that. I don't know. I did what I wanted to do. Is it okay? I don't know. What do you guys think? What do you guys think? Here, let's change the data series back here for a second. So we want the candlestick plus plus. We want like a bar width of 16 and a really big wick. And okay, that's not right. No. 16, I said. Apply. Oh, really? Not what I wanted. Okay. And then there. With the scaling that I have, that's correct. And then there is trading hours break line, which is a dotted gray line, and I want that to be like 4. There you go. Good deal. Ta-da! Oh, and we can add in somewhere in here. I think I have a watermark. Where are ya? My watermark. Apply. No. Custom text. We will do the custom text. We'll do, say, S&P 500. Apply. Okay. And the opacity will be more like 4. No. 0.4 and make it white. There we go. And then I think that I have to like do something to oh. I have to change it to make it sure that it draws in the background. Okay, but in general, what do we think about that? That looks good, right? It'd be good for the newer traders. So that they go, oh, yeah, I know what that is. That's the S&P 500. Get the dollar to a new all-time high, and we will. Are you long the dollar, Akshay? Are you long the dollar? Owner, string, text position. Hmm. I have U.S. bonds. I am long dollar by default. That, and I just want to watch the euro burn. I I hear what you're saying. I myself am a little interested to see what would happen if the euro fell below peer parity, and what would happen to the eurozone, because not that I'm opposed to having like a conglomeration of European states together and everything. It just seems to me that the system that they have is really sucks. you know like, I just don't see how that's ever going to work. The economies of them, and they're just too different than they are from like US states. And even in the US, like, it's a problem, right? Like, Z order. All right. Once again, it's like, here's a thing that I've done, and they don't, no enhancement. You cannot set an explicit Z order to use. You can just set the Z order of the object to be separate of the one used for the indicator script. Oh, this was back in NinjaTrader. NinjaTrader 7. Here's 2014. Used to assign a unique identifier representing the index in which the chart objects are drawn on the chart z-axis. Objects with a higher z order are drawn first. So I want it to be, if you want your object behind bars, use index -1. Can I just do it from, oh, they say on state change. Do it in on state change if state equals historical. Or, well, in this case, if state equals d, no. Set z order -1. Okay. Oops, that's a capital O, I think. Once again, it didn't give me the sound. I need to bring that back. Okay. So I think that when I come in here and I do my watermarks and I just change this to be about like 0.2 and apply, but the Z order is still in front. What is this other bit right here? What does this bit of code do? Okay. Oh, you know what's going on here? Is I probably in the options. Yep. Compiled successfully. There we go. Okay. Well, it says that it's the order is. Well, maybe I need to take it off and back on. Let's try this. Let's try that. Remove. And then add it back on. And okay. No. Hmm. Well, I gotta get going. That's okay. I'll figure it out. See you guys tomorrow. Got some. It's gonna be interesting market, isn't it? S&P 500 saying that it's gonna be a turbulent week. Stay profitable, friends. Riley's